All right, let's dive right in. We're about to break down a massive showdown that could send shockwaves through the entire global economy. And look, this isn't just about politics or some high-level finance stuff. This is a fight that could actually hit your wallet, your savings, and the stability of the whole system. So, let's get into it.
So, let's start with a pretty wild question. Why is the world's biggest influencer in serious danger? And trust me, the answer is probably not who you think it is.
You see, the person at the very heart of this whole storm is one of the most powerful people in global finance, and right now he is caught in a political crossfire that could have some absolutely huge consequences for all of us. And that man is Jerome Powell. He's the chairman of the U.S. Federal Reserve, or the Fed as you probably know it. Now, the Fed is America's central bank, and Powell's decisions on interest rates, well, they don't just affect the United States. They send ripples across the entire globe. That's what makes him such a massive influencer. Okay, and this is where things get, well, pretty unprecedented. According to our source, Powell is under incredible political pressure. He's even facing the threat of criminal prosecution. And get this, it's for refusing to cut interest rates just because he was told to. This kind of pressure fundamentally challenges the independence of the Fed itself.
So that brings us right to the heart of the conflict, this huge battle over interest rates. And this isn't just some technical debate, It's a major clash between two very different ideas, getting short-term political wins versus ensuring long-term economic stability. So, on one side, you have the political goal. The source explains that the push is for lower interest rates. And why is that? Well, lower rates make loans cheaper for everyone, for businesses, for consumers, and that can kickstart a temporary economic boom. And, a booming economy usually means more votes. But the flip side, the long-term risk that the Fed is trying to avoid is huge. We're talking high inflation, a weaker currency, and just general financial chaos. And this is where it gets really, really critical. If the Fed caves to political pressure, it could trigger an incredibly dangerous chain reaction. Our source calls it a domino effect. You can think of the Fed's independence as the firewall that's preventing a global economic fire.
So how exactly would these domino effect unfold? Well, let's walk through it. First, as you can see, the Fed gives in to the political pressure. Right away, it's not independent anymore. It's just become a political tool. The next domino to fall, mass money printing, to create that quick artificial boom. But that leads to a terrible consequence. Your savings start losing their value as inflation goes through the roof. And then, the final, biggest domino falls, the entire world loses faith in the US dollar as a stable currency.
And to really hammer this point home, the source draws a direct line to a crisis we all remember, framing this whole thing as a potential repeat of 2008. I mean, that's a pretty chilling thought, isn't it? Now, a loss of confidence in the US dollar isn't just an American problem. Not at all. The entire global financial system is basically built on top of it. So a crisis at the Fed could very quickly spiral into a global catastrophe. So what would that global shockwave actually look like? Well, our source points to a few major things. First, you'd see rapid de-dollarization, with countries all over the world scrambling to dump the US dollar. That would trigger massive instability. We'd probably see outright panic in global markets, triggering huge sell-offs. And all that cheap money being printed, it would just encourage wild, risky financial bets, making the whole system even more fragile.
Okay, so I know that is a pretty grim picture. But here's the most important question for you and me. Is all of this just political noise we can ignore, or is it a genuine signal that we should be paying very close attention to?
The source material is emphatic on this point. The argument is that this is absolutely not something to brush off. This is a clear signal of potential trouble ahead.
So, if it's a signal, what are you supposed to do about it? Well, the advice from the source is to stay alert and to consider a classic strategy for uncertain times, moving some of your assets into so-called safe havens. Assets like gold that tend to hold their value when currencies get shaky.
And they get pretty specific, suggesting an allocation of about 10 to 15% of your portfolio into assets like gold and silver. Historically, these have been seen as a hedge against exactly what we're talking about, inflation and currency devaluation. And that really leaves us with one final crucial question. The dominoes seem to be lined up. The warnings have been made. The only question left is, are you ready for this signal?